Hello everybody, it's Christopher Mullen from the Gold and Oil Guy. It's Wednesday, May 5th, 2010, and I'm just giving you a midweek update on the gold, silver, oil, and broad market using the SP 500 ETF charts. So I'm just going to quickly run through here, show you my opinions, my analysis, and what I think is going to happen in the near future and why we need to be cautious at this time. So if we take a look here at this is the GLD Gold ETF. We had a big run up in 2009. We saw gold break down and profit taking in pretty much the last 6 months. And what we've seen is constant lower lows and lower highs all the way down. We saw this nice rally back up. Didn't break the previous high here. Started to head back down, and then finally it broke out here to the upside and started to trend higher. And what we saw there was more or less we had the downtrend, and we saw the market gold starting to make a cup formation, so it started to have a higher high over here. A higher low over here. And we saw a possible reverse head and shoulders, so we've got this shoulder, this head, and shoulder, and it gave us this neckline here. And of course, once it broke out there, that got everybody looking, hey, now we're heading towards a higher high. We're going to break this high, and we've got a higher low, so now the trend might actually be up. And that's when everybody really started to shift and go into buy mode for the gold. And what happened is once we had this neckline here broke, we had a pullback and a test of the neckline, and we saw a surge higher. Now if we draw a trend line straight across from there, we can see it pretty much equals to where gold actually pulled down to today. So we had the breakout through the neckline here, came back, tested the neckline, rallied through this previous high, and now it's pulled back and tested that with strong volume, and it's bounced and closed firmly at near the high of the candle. So it looks like gold is about to work its way higher on a trend in this direction at that kind of speed, and it could be in this channel here somewhat and just bounce its way up until it reaches the previous high, at which point we might see gold trade sideways and create more of a handle. This will be a large cup and handle pattern, and we could see it continue much higher, but that's still a ways away before I think it tests the high. A few weeks anyway. But that's what I see for gold. And we do have volume moving back into the ETF, showing that there's quite a bit of interest. During this whole time here, when it was kind of trading in no man's land between this high and this low, so all this kind of action in here, volume just slowly started to dry up until we had a breakout, and now volume is picking up and we're seeing surges back into silver. So that's what I see for that. Let's just check out the silver chart now, which is the SLV fund. And what we have here is we've got a key pivot point through all this noise here, which silver ended up pulling down to today. We've got this uptrend line, which was broken yesterday, or on Tuesday, May 4th, and we saw follow through today with silver gapping lower. It touched this key pivot point, and it's closed fairly close near the close there, near the high of the candle. So that's good. We are at a key support level. Trend is more or less up in silver. You can see we've got big silver for this bottom, or big volume for this bottom in silver. We've got big volume for this bottom, most likely in silver here at this key support level. And of course, other sell-offs, you can see we had large volume for them. Volume is a great indicator. It shows people are panicked, selling out of positions, and when everybody's panicked out, it means most of the risk is taken out of the trade because most of the sell orders are already finished. So the rising volume at a support level like which we're at today is a strong sign. So silver, we might see silver grind sideways here. Same with gold. I'm going to explain this in the SP 500 chart, which is just after the oil one. But we could see some sideways chop here, and we could see silver and gold continue higher, or we could see it actually break down lower here. So we'll have to play that by ear, but I'll explain that on the SP 500 chart. So Here we have a chart of, let me pull up the USO. Oops, sorry about that. The USO chart, which is the United States Oil Fund. We've got similar price action. It's pulled back into the middle of its range, and the more it pulls back, the better. Like this is right pretty smack dab in the middle. You can actually go farther back in the past, and there's more price action above and below it. So it's a pretty key level. We've got nice big volume at support here. Every time we see big selling at these points, we see big volume. This bottom, there's big volume. So volumes, like I said, they help really pinpoint a good entry point. We just need to see what happens with the broad market, because if the broad market continues to tank for a few more days, it could very easily pull all these commodities down. If these commodities have some good support here and strength, we might just see them trend sideways as the market continues, the stock market continues to slide, and then once it firms up, we could see these commodities kind of rocket higher. So that's kind of what I'm looking at. I wouldn't take any action yet. We want to see what the sideways action is going to do in the next couple days here. So let's take a look at the SP 500, which is the SPY ETF, and what we're looking at here is we've got similar price action. These both look like tops. We had this up and down price action. We got some of these big spikes of selling volume. I call them get ready spikes. It means there's some distribution going on, and usually you see a couple spikes before the market tanks. And I pointed that out about a week ago. We saw a couple of these big spikes of selling and some thrusts down, and we saw prices drift back up, but it was on lighter volume, and I was pointing to lower prices and that we were going to roll out and start heading down again. But what we're looking at here is we saw a rising volume into this sell down back in November, and once we had capitulation selling at the bottom, it pinpointed the bottom, and then we had a rally. It's similar price action to what we saw in the January, and then we had a huge volume day washout where panic selling was in the NYSE with about 35 sell orders for every one buy order, and that is just complete fear in the market, and that pretty much pinpointed the bottom for that. And we've had a big rally ever since then, and now we're getting this topping action again, similar to what we saw in January here. It's happening right here, and now we're getting this rollout with these get ready spikes and some follow through volume today with these two candles. So right now the market is completely oversold already. We could see another down thrust down into around this top here, and then I have a feeling we're going to see some type of small bounce up, and then we'll probably see another thrust down, and that thrust down should be enough. We'll see very high volume. It should be complete panic selling. Sell orders to buy orders should be completely out of whack with about 20 or 35 sell orders to every one buy order, and that'll help us pinpoint the bottom, and we'll look for some good entry points then. So that's what I see in the market right now, with gold, oil, and silver all at support levels, and the S&P is really oversold here. We could just get a relief bounce to test this breakdown level, and if we do get this bounce, we'll probably see gold, silver, and oil have a nice little move up, but I don't think they're going to make any big runs. I think they're just going to drift up a little bit, and they could actually be a good shorting opportunity, because I think the entire market is going to have a nice downdraft here. So be very cautious. If the market continues to slide, it's going to pull commodities with it, and that's what I see for now. Anyways, I'll talk to you guys later. Bye bye.